Hello, everyone. Very nice to be with all of you here today. So I'm very pleased to introduce my co-panelists. It's such an amazing panel of experts in the field. So we have with us Joana Neto, just on my left. Joana is an AML data specialist at the European Banking Authority, the EBA. So she focuses on innovation in crypto assets, among other things. Joana has extensive experience in financial crime compliance as she worked with different industry players as an intelligence officer and financial crime investigator, amongst other roles. So we also have with us here today Pamela Clegg, who is the Chief Compliance and AML Officer at the United Texas Bank in the US. The bank focuses on crypto assets, amongst other things, and Pamela oversees and manages all aspects of compliance within the bank. Prior to this role, Pamela started in crypto back in 2018 when she joined CipherTrace. And before that, she had a decade worth of experience in the intelligence industry in the US. So we also have with us Olga de Truchis, who is the coordinator on crypto assets and blockchain compliance at Société Générale in Paris. She is also a co-driver of the Europol Financial Intelligence Public-Private Partnership Crypto Asset Workstream. And also, she has many hats. She is the OSCE and UNODC expert on virtual assets. And of course, we also have Nico de Gabriele, who is currently working in the policy division at the European Central Bank, dealing with crypto assets, among, of course, other things. And prior to this role, he served for many years in the commercial banking sector. Welcome, everybody. So today, it's not a secret to us that we live in a world where the transfer of value from one place to another is increasingly complex. And crypto, of course, plays an important role in moving funds from one place to another. From the perspective of traditional financial institutions, such as banks, banks are more and more involved in transfers of funds involving crypto, as well as in products which involve crypto. So for example, banks play a vital role in crypto on and off ramps. And as the saying goes, if you're not doing crypto and you're in banking, crypto will be done to you. So of course, another challenge that we're facing in the finance industry is achieving payment transparency. And crypto, of course, plays a role in it as well. So it's really important to get the things right from the policy, from the regulatory policy perspective, thinking about crypto. We know that we now understand after the crypto winter that most probably crypto is here to stay, and we need to think how to address this challenge of financial crime risks, but also opportunities related to crypto without hindering innovation. So Joana, of course, the EU has been leading the regulatory progress in this space. Could you please elaborate on how the EU bodies and institutions have been addressing this challenge of managing financial crime risks, but also not hindering innovation?
Thank you. First of all, I know that the words supervisors, regulators, and innovation, they are taken by a lot of you, but it's not going hand in hand. But what I'm very confident of is that throughout the years, the history has told us actually that particularly in the field of crypto, the supervisors and regulators, they have supported the innovations, but of course, always bearing in mind that there needs to be a balance between innovation and the consumer protection and the protection of course, as well, the businesses themselves, the good businesses. That being said, the first steps were actually taken at the global level by the Financial Action Task Force. And Financial Action Task Force is the global watchdog in the area of AML-CFT. And they already, even though they start, delving into the risks of the use of crypto, they changed their recommendations in 2019 to ensure that whatever AML-CFT requirements would be applicable to any other sort of financial instruments would also be extended to the transfer of crypto assets or virtual assets in their language. So this was the first time at global level. And then at European level, the first actions were already in 2018 with two specific types of crypto asset service provision within the scope of the European regulation, our AMLD, our Bible in the area of AML-CFT. And those were the custodian wallet providers and providers involved in the exchange between crypto and fiat. But it's only at the end of this year that Mika and Laura, she already did half of the job for me. She already explained what Mika is and what is the AML-CFT package. Thank you very much, Laura. But it's only at the end of this year that actually the European regulatory perimeter is going to be extended to this wider range of crypto asset service providers, and with the creation of an authorization regime for them. But what most of you should be aware of is that it's not only about MiCA. If you work with crime, you must be aware of the AML-CFT package. And one of the main documents, main legal acts, is the Transfer of Funds and Certain Crypto Assets Regulation, which is going to enter into implementation at the same time as MiCA at the end of the year, which basically extends the scope of that act, the traceability of crypto assets, or the traceability of transfers to the transfers of crypto assets. And that same act is going to also extend the scope of the two obliged entities that we were used to work with until now to this wider range of crypto asset service provision that Mika is referring to. So this is everything that is happening at the moment, and what we call the primary level of regulation. But then you have the mandates, you have the guidelines, the regulatory technical standards that the EBA and ESMA are working on. So you also should be mindful that there is a lot of clarifications about these first level mandates that you should read and you should consult our websites to have a look at that. But we are not the only ones working on this, and here is where probably my colleague Nico could speak a bit more about their work and our joint work as well in the area of crypto assets.
So Nico, of course, the European Central Bank has been involved in crypto tangentially since 2011, I believe, when we witnessed mentions of crypto in some publications, as well as the related financial crime risk. Could you please elaborate on this?
Yes, thanks. Well, Joana and I, although working not exactly in the same field, cooperate because the role ECB plays in ensuring financial stability in the Union and in conducting banking supervision requires the involvement of ECB in the publication of opinions on each and every legal act of the Union that has a financial dimension, and IML regulation definitely has a financial dimension, as well as marketing crypto asset regulation. Yulia, you are right. The ECB has been looking at crypto since the very beginning, and it cannot be differently, considering that every time there is an asset class that may be used for making payments, and the proper functioning of the payment system is a significant driver for financial stability or financial instability, we have to spend our time, devote our efforts to ensure that there is not a threat to the good of the society, because financial stability is a precondition for the prosperous development of our society. And the financial stability hinges largely not only on the proper functioning of the payment system, but as well as on the financial integrity. And here the attention to the money laundering, terrorism financing, and proliferation financing comes into play. Although we do not have any supervisory power in the field of AML-CFT, as in a number of cases emerged before COVID, it was clear that banks were brought to knee. Banks with very strong liquidity and capital positions were brought to knee in a matter of hours because they were found in breach of AML legislation, and at that time almost exclusively by AML American authorities. I do remember a speech our chair at that time, Daniel Louis, delivered before the Economic Committee of the European Parliament. We should stop relying on the US policing our banks. And this was, in my view, one of the most important statements that were made and was a boost for the progress of the reform, or the overall, as it is better to define it, of the IML framework in the Union. And the first steps have been moved properly outside the IML regulation, but by using other tools. For example, very important have been changes introduced to the Capital Requirement Directive that, despite the name, discipline the functioning of the risk management arrangements at banks. where it has been established, and this is very important, and I explained the why, that banks have to have a holistic approach in the identification and management of risk, and supervisors, Prudential and IML, must cooperate. In the past, it was more a matter of, I don't like to cooperate. Now, the rule is clear. You must cooperate, because failure to cooperate equates to failure to take actions to preserve the integrity of the financial system that is premised on the safe and sound conduct of the business of banks. And sometimes you have a very profitable bank just because that bank doesn't care that much about IML rules. In the recent revision of the guidance on risk management and risk culture of the ECB that is currently under consultation, and maybe you may be willing to offer your contribute, we have made two important statements in the field of IML and crypto. The first statement is the following, that every time a bank intends to make a significant change to its business proposition or a change to the business model, as it is frequently referred to, banks have to make reflections on how this impacts on their risk absorbing capacity, and they have to reflect this in their own risk appetite statement. So when you intend to launch a crypto-related business proposition, you have to reflect whether you are equipped to do that. It is not just a matter of being able to absorb a loss from a capital viewpoint. Your reputation should withstand the shock of being found in breach of the legislation. And crypto is not a business for everybody. And I would say better doing a brick and mortar business in the proper way than becoming a fancy bank and being caught into problems. And the second, and then I stop, I promise, is the emphasis put on the important role that compliance function has to play. And here the call on compliance doesn't come from an IML supervisor, comes from a prudential supervisors. We see that compliance must play a key role in steering compliance, sorry for the joke of words, with IML, CFT rules, proliferation financing, and sanctions. And what we would like to see is that there is a dialogue between compliance and risk management, because we have seen in the past that the ICAP, internal capital adequacy assessment process, and the internal liquidity assessment process are run by risk management, and the financial crime dimension is not reflected, or were not reflected in these two documents. How could you conclude that you have a sound capital and liquidity position when you have not assessed the threat that comes from your exposure to money laundering risk? Because if you are a bank, you are exposed to money laundering risk. We may discuss on whether it is high or low the exposure, but there is.
So Joana, going back to the challenge of payment transparency and crypto, there has been an important development back in July when the EBA issued the travel rule guidelines. Could you elaborate on the fact that CASPs, the crypto asset services providers, are also covered? Could you tell us more about it?
Thank you. This term, actually, travel rule, is a term that we use from the FATF. So the FATF, they extended the travel rule requirement, which means basically the traceability of a transfer back to the originator and beneficiary quite recently. And then it was up to then the different jurisdictions to try to reflect that development as well at the jurisdictional level. And at the European level, it was then with the transfer of funds, a certain crypto assets regulation, which is going to be implemented at the end of the year. And there was a mandate for the EBA to further specify how you, or if you work with crypto assets, transfer of crypto assets, how would you comply with that regulation from a more technical perspective for you to understand what is the supervisory expectation. So here in these guidelines, we further specify what is the specific information that the regulator is referring to in this regulation that I talked about, the transfer of funds, certain crypto assets regulation. And then we also specify what are the monitoring tasks and when you should do the monitoring tasks, because there's a lot of question in terms of before or after the transfer takes place. So we refer to all of that in more detail and from a technical perspective. And one of the innovations of these guidelines published, the final report was published in July, is that we created an expert group, and I saw some familiar faces here that actually contributed to that expert group, and I know people online who actually also contributed to that expert group to inform our work. We did exercises with them to identify what would be your challenges when dealing with transfer of crypto assets, to ensure that we would reflect the challenge in a balanced way in the guidelines. And of course, we have a lot of ideas to already suggest to the regulator for the next revision of this regulation when it takes place. One of or two of the challenges that we came across, and we know that is going to stay for a while, is the regulatory fragmentation. So the travel rule requirements created by the FATF, which we have to take on board, is not transversally applied across the globe, which means, for instance, if there is a transfer coming to Europe, we have very specific requirements for transfer, without specific information from a country which didn't apply yet these travel requirements, then that creates a challenge for the entity that is responsible for applying the due diligence processes. So we know that this is one of the main challenges, is the regulatory fragmentation. And we try to, in a way or another, to provide a bit of guidance in these guidelines on how to face these sort of situations. And another one is the use of technology itself, because what we identified in the scope of the working group is that there is some technology being used to circumvent the challenges, but is not always available. And that is specifically the case, for instance, for unauthorized wallets. And there are a lot of challenges in applying the requirements that our legislator is asking in the transfer of crypto assets regulation.
Great, thank you. So you mentioned technology. Could you elaborate on how technology can be used to actually combat financial crime? We've heard from a number of technology providers offering blockchain intelligence solutions. Could you share your thoughts on that?
First of all, I'm a bit biased because most of what I did in the past and what I do at the moment is really related with technology. So yes, it's extremely important if you ask me personally. But I need to make here a caveat, because I'm a big supporter of technology, but it needs to be technology with specific controls in place. And when I say controls, it's really, I'm talking about the monitoring, the testing, the training, the strategy in place, really looking at that from a more systemic perspective, because technology without controls is synonym of risk. And we had certain presentations here today where a lot of reference was made to these sort of situations in their own scopes. That being said, crypto is really disruptive. It was a breakthrough when it emerged more substantially in the society because of the technology that is behind it. So we need to talk here about crypto and particularly blockchain into two different aspects. So the technology as a service and as a product, and then this technology as a tool to fight crime. And as a product and as a service, it's massive, the changes that introduced, the innovation that introduced in society, because of course of the immutability and the transparency that it entails, which doesn't exactly happen with any sort of traditional financial product. And of course, it enhances as well the traceability in a way comparing to other traditional financial products, because it can really go back to the originator and ensure that the flow of the transfer is visible for the entities. But then in terms of, if you talk about the importance of this technology and the innovation of this technology as a tool, then we have an array of things to say and to talk about. Unfortunately, we don't have time. But really, you mentioned blockchain analytical tools. So it's really about helping the forcing process to unveil patterns and to really ensure that you can really identify the network of connections, which is not really a thing not yet in a wider financial products and services. So there is this added value that the blockchain analytical tools can bring. Then another innovation is, for instance, the smart contracts that allow really the automation of compliance tasks by ensuring that certain transfers, for instance, can only take place if they fulfill a certain criteria. This allows as well the real-time monitoring. And finally, and probably one of the most important things is that technology related with the blockchain really introduces an innovation in terms of data sharing and information sharing. And here you may say, but Joana, data sharing is and data protection is one of our main challenges. And indeed, we are perfectly aware of that. It's a challenge for us as well, believe me. But here is where the beauty of innovation comes into play. Before the challenges introduced by the policy, and particularly the data protection policy some years ago, we wouldn't have access to certain types of technology like zero knowledge proofs that were created to really circumvent these challenges that the policy itself introduced. So I think this is a beautiful example on how policy really fosters innovation.
Yes, indeed, a very good mention. Pamela, as you have background in intelligence, and of course you're very familiar with blockchain analytics, but also you've changed hats now, being a representative of a regulated financial institution. How would you summarize a bank's role in combating financial crime related to crypto?
Yeah, so I think banks play various roles in that field, and it really depends on what the bank is doing with regard to crypto. So you might be asking, why is United Texas Bank at this conference? We are a crypto-friendly bank in the United States, and there are very few of us still left. We did join the club by getting our enforcement action on Wednesday. So we are now part of that group that has been, regulated by enforcement. So that's exactly why I'm here. I'm at the bank because I have the crypto experience. The bank needs to build out that compliance program to be able to continue to provide those services to those crypto entities. I think it's essential to understand what role banks can play, especially for law enforcement that's in the room. I have access to a lot of information in the crypto space just by virtue of the relationships that we have at the bank, whether that's directly with a crypto exchange, whether that's with a particular market maker, a DEX, what have you, whoever is our customer. I can actually request information from those customers by virtue of a simple RFI, just to continue to bank them. They have various standards that they have to adhere to by being our customer. That includes KYC. It includes providing transactional data. I have my own blockchain analytics tool and a team that runs that. So we do our own on-chain investigations as well. So by virtue of understanding what banks within your jurisdiction are actually doing in the crypto space, that actually gives you an additional avenue of information for your investigation. So I think it's important to understand that. And that can also include transactions that we're processing for correspondent banks that are processing on behalf of exchanges that are located in other jurisdictions where you can't typically get information from. So just remember that that avenue is available for you guys. If you haven't kind of made friends with your crypto-friendly bank, you should. For those banks that aren't really directly engaged with crypto, as you already said, Julia, if they're not really doing crypto, they're still having it done to them. So obviously they are still processing those crypto flows, those crypto related flows, as we like to call them, whether that's through, ACH, funds, EFTs, wire transfers, whether that's using cards, what have you, but that is how they are, for the most part, on-ramping, off-ramping. Even for those widgets, right, that are connected to your non-custodial wallets, those are still being processed through fiat in some way. And until, we have kind of a broader market where I can still go and where I can start to, really buy daily goods with crypto, it's still necessary in most cases for those criminals to off-ramp. So having been in your shoes, I would also just caution everyone, don't just get focused on the on-chain information in those investigations, but also look for those on and off ramps too, and then what information you can glean from the fiat partner in that.
Thank you so much, Pamela. And also, I would like to go back to the challenge of payment transparency. I imagine that when you experience that career change coming from the intelligence industry and the blockchain analytics provider to banking, you lost that, well, to some extent, you lost that visibility, that big picture view of data. And now being at one single bank, you see part of that data, but you would not necessarily be able to see, where the money flows after your bank. So how are you dealing, from your perspective, how are you dealing with that lack of visibility and that challenge of fragmented payment legs and you being able to see just one or two of those legs?
Yeah, that's a great point. So number one, that's why I really prefer to work with our crypto related transactions, because I can, if that's an on-ramp and then it's going out to one of the exchanges through one of our correspondent banks, I can then go to the correspondent bank, request that on-chain information. They will get it from their crypto exchange customer, and then that eventually trickles back to me. That generally happens within about 24 hours. So I know sometimes law enforcement subpoenas or legal requests take longer than that. I can generally get that information a lot quicker. And that's, again, that's standard. It's hard. I know there's several exchanges in the audience. It is hard to maintain a banking relationship, even in Europe. And that is with conversations with various exchanges around the globe. It's hard in the US, we all know system's broken. But in Europe too, it's hard to maintain those banking relationships. So they are generally very compliant with those requests in a relatively quick turnaround. So that's one of the ways that we kind of keep up with the flow of money. And then the other way is just building those relationships with our correspondent banks or with our counterparties so that we can send out those RFIs, so that we can have that communication with the bank, so that if it is just a straight wire transfer and I can't naturally see what goes beyond that wire transfer when it gets to the other bank, I can reach out with an RFI and hopefully get additional funds or additional information on the funds.
So much. Olga, coming to you. So obviously, NFI can be involved or exposed to crypto in different ways. We're speaking about direct exposure, indirect exposure via its customers, but also many banks are obviously providing their own crypto solutions. Could you elaborate on that?
Yeah, yes, definitely. Hello, everyone, and happy to be here. Thanks for the question. Yeah, I can summarize in a very simple way, basically three main ways on how traditional financial institution banks can be exposed to crypto. So we are talking about direct exposure to cryptocurrency by the bank. So for example, bank is offering crypto asset service or launching their own ventures in the cryptocurrency, right? So we have seen a lot of examples. So we can talk about trading, offering even purchase and sale to their customers in partnership with some crypto exchange or crypto broker, right? The second situation, the bank can be offering, even if they are not offering the services on crypto directly, they can be opening the accounts for crypto exchange, for crypto broker. So they have their direct risk related to the activities of the customers of this crypto exchange without having done the KYC, know your customer, due diligence procedure on the customers of this customer exchange, right? And the third situation is indirect exposure. So they will, for example, have quite a lot of customers using the bank account to purchase and sell a cryptocurrency without being like a crypto asset service provider, right? So from my experience, when I'm discussing within EFIPPP, Europol public-private partnership with many representatives from traditional FIs, but also in other gatherings, international meetings, right? So the reaction would be why I have to put in place some specific monitoring compliance framework, because I am quite risk averse. I'm not banking any crypto exchange or actor in this field. I'm not accepting the customers dealing specifically with crypto. I'm not launching any product. Why should I do this? So, and I give them a lot of examples because in any case you are exposed and you just need to implement specific in your transaction monitoring system, which are off-chain, which is not based on blockchain analytics, you need to implement certain, for example, list of virtual asset providers, keywords, etc. You just do a test and you will see that you are exposed. And sometimes from the experience, we can have the customers that are really doing business, that are CASPs, that they are dealing without license, but it's discovered afterwards. So I guess that this exposure is not always understood by the traditional financial institution, by compliance officers. So it's a lot of awareness and training to make them aware. but it's the risk is there and it's possible to manage it.
I agree with you on this challenge of banks having to understand the various and very often varying licensing requirements from one country to another, and make sure that those licensing requirements are adhered to when you're starting to deal with a crypto customer is another challenge that traditional financial institutions are dealing with, aren't they?
Yeah, exactly. Yeah. So the regulations, and we are sometimes lost. There could be requirements in the US that are not the same as in Europe. And for example, we can be banking the customer to which we are also offering some services in USD. And then we are somehow having this discrepancy and how to deal with it on practically speaking, when we already have the account and the client is refused to be offered service because the regulatory interpretation is not the same, because US, for example, it's considered as a regulated service, and in the EU it is not. So yeah, we are facing similar challenges like this.
So could you speak to us about other threats in addition to this one? Probably as a representative of a large financial institution, you have visibility on these emerging threats. Could you introduce us to them?
Yeah, probably I would probably not present it as a threat, but as a challenge, and what can be the situation. To illustrate, what are the main topics that are raised to my attention, to the attention of my different peers from other banks. Wealthy individuals, and we have seen in some recent publication as well that from year to year we have more crypto millionaires, right? So they come into the bank and they are asking, can I withdraw some money from the crypto exchange? It comes from my past crypto investments, and I'll buy the life insurance and I deposit some money to the bank. So the challenge for us is about the proof of source of wealth and source of funds, how we can adapt our procedures and processes. The typical situation would be we have a young man having early investor in crypto, having bought for between 10 to 20,000 euros, and now he has between 50 and 100 million euros. So, okay, that's the story. It happened 10, 12 years ago. How do we constitute all that from the beginning? Because he has invested from one exchange that doesn't exist anymore, for example. So he has no evidence to provide it about the initial transaction via this crypto exchange. And when I'm seeing operational the cases, I see that there are several. It's not only one exchange. Okay, we will receive funds via some intermediary, like a crypto exchange or similar intermediary. But when we try to build the history since his initial investment, we see that there are several exchanges. We can have 4 or 5. We can have several banks with whom he is transacting, and also self-hosted wallet. So how we manage this part with the self-hosted wallet, because we don't receive money to the bank directly from self-hosted wallet. Of course, it goes through the intermediary. So we need to somehow rely on the due diligence done on this intermediary. So take into consideration the strengths of their regulator framework. But for us, still, we need to do our own due diligence. We cannot rely. So we can ask the wallet addresses. Then how far should we go? You know, we can have 10 wallets, 20 wallets associated with his past investments. He will explain the story. And the use of blockchain analytics alone will not be the answer to our questions. So we need to collect additional evidences of chain, question the customer. So, and this is a real question. And the other point about high net worth individuals is about the question of the taxes. So the initial money you put in crypto could be legitimate, but what about the profits he got from it? How far should the bank go? So we can ask the tax declarations, but are we sure he's using so many exchanges, so many banks? Are we sure that we can rely on it? You know, so it's one situation. The second one is non-declared crypto exchange, like crypto intermediary, right? It could be also a physical person. It's not only about legal entity. So we can see quite a lot of individuals offering such service. Then the third situation, I would think the risk is about the investment scams, right? And we could observe several elderly people that unfortunately are scammed. And often the bank would know it when it's too late. And that's somehow, I think that we need to consider how to deal with this situation, right? And the other situation is sanctions. So one of the questions could be, and that's what I've heard as well. For example, Russian citizens selling their property in Russia because of the traditional banking institution are stopping those flows. So they would use crypto exchange. They would exchange rubles to cryptocurrency and then cryptocurrency to euro via crypto exchange and asking, can your bank accept these flows? So this just to illustrate, of course, there are other examples, but it's to show you that the banks are really key in all this. It's not only about CASPs, about professionals in this field, but even the banks that are not directly exposed, they are key role to play in all this.
Indeed. Pamela, having heard all this and obviously experiencing your own challenges, would you be able to share any advice to other financial institutions, like, for example, in your correspondent banking network, how to deal with these challenges and how to assess and address these risks?
Well, if you work in banking, you know, it all comes down to the risk assessment, right? And what falls within your risk appetite. So the first step really is to really assess what risk crypto poses to your institution. And that means to take a realistic view and not kind of, as Olga said, not, you know, bury your head in the sand and say, we don't touch it, it doesn't touch us. But really sit down and kind of look at that. And then, you know, Nico made a really good point too, that a lot of banks will kind of get into the industry, and this is why a lot of the banks have enforcement actions, but they'll get into it without actually building the infrastructure to be able to do it safely. So step number one is, if you are considering dipping into this industry, you really do have to build the compliance infrastructure first. And that is of every enforcement action that we've seen against the crypto-friendly banks, that is the number one issue within those enforcement actions. Is they did not have the compliance infrastructure. They did not have the personnel, the resources. They didn't have qualified personnel. I still see banks that are crypto-friendly and their chief compliance officer does not have crypto experience. Right. So that is probably one of the biggest issues, is actually understanding. So that leads me to probably the biggest thing you can do, which is training. So really understand the industry. Even if you don't think that it's touching you as a bank, you really do need to have some training. And everybody has a training now. You know, we've had Crystal, we've had Elliptic, we've had Chainalysis up here. They all have training. I'm sorry, TRM too. I didn't mean to leave you out. But they all have training programs. ACAMS has training programs on crypto. Everyone has a training program on crypto that you can access. I think Aiden even said, well, his is more recovery, but some of his trainings are free, right? So you can find the training that you need. My recommendation, and this is coming from an AML expert, but my recommendation is to go to the crypto experts to get training on crypto. Don't go to the AML experts to get training on crypto. But really engage in that and make sure that your staff understands it, right? When they go to conferences, when they have time to do their CPE, you know, pick a course or two so that you really actually understand it. And don't, you know, if you're a bank that doesn't touch crypto, you don't need to take a training on smart contracts. Right? It's not impacting you directly. You really need to take a training on what does on and off ramping look like? What are these crypto related flows look like? Like, take a training that's really relevant and reflective of the activity at your institution. But that's, you know, training. And of course, I'm a former trainer too. So, you know, I'm really big on that. But yeah, definitely look into it, understand it. And if you don't have kind of the knowledge or where to start, you know, somebody at your institution, I guarantee you, has had a curiosity in it, and they'll have, you know, read free trainings, or they've picked up free courses somewhere. But that's probably the biggest thing, is just to be in the know.
That's great advice. Thank you.
Yeah, about training, I fully agree. I just wanted to highlight that the training is not only for compliance stuff. It's so important to train LOD1, so first line of defense, front office, who are directly communicated with the customers. Because it's thanks to their involvement and awareness, the bank and compliance team will be able to identify new customers that are dealing with crypto, and and also even during the onboarding process, if the financial institution is open to this kind of clients from crypto, right? It will make the process so much easier if there is a trained staff at the first line of defense asking the right question to avoid going forth with the question that it can last for weeks, even for months sometimes, the whole process. So just to highlight it, and also senior management, because the senior management should support and like guide, give the clear strategy in terms of what is the permissible business related to crypto, and what kind of customers from this sector we can onboard or not. And they need to take this decision. They need to understand what it is. So they need to support and highlight. Thank you.
Right. Just to add on that, and Olga, you mentioned it already, but source of wealth is such a complicated issue. I mean, she walked us through the spider web that can be source of wealth. It is very complicated. So yes, your first line of defense definitely needs to be trained. But identifying source of wealth is a complicated issue. For all the analytics tools that are sitting in the audience today, that is probably the biggest challenge for banks, whether they're crypto friendly or whether they are actually digital asset banks, is identifying the broader source of wealth, not just source of funds on chain where that transaction or this transaction came from, but really kind of building out that basket that identifies source of wealth for those customers. That's a huge challenge for the banks.
Thank you. Nico, going back to the public sector perspective, could you share with us insights on ECB's recent work and how it relates to crypto and managing financial crime, in addition to other policy mandates, such as financial stability?
But allow me to make a remark on the last point. Thanks for the question, but allow me to make a remark on the point that was discussed between Olga and Pamela. Training important to have the endorsement of the senior management directors, but there is one thing that we should do first, and this I say as a supervisor, a business-wide risk assessment. Emphasis on this is never exaggerated, because the business-wide risk assessment is the first and foremost important step that is recommended by the FATF, is clearly outlined in the IMLD and in the future IML regulation and in the EBA guidelines on risk factors. Because before you start a business, before you apply for a license, you have to know what you are going to do, what the tools you need to conduct the business, where and how you have to train the staff, and what the skills of the directors, the members of the management board must be. Because one of the key aspects of the new EU regulation in the IML field is the obligation to have a dedicated member of the board for the IML CFT. And this raises significantly the importance that the endorsement by the board has for the proper functioning of the IML program. If the board is unresponsive, if the board doesn't care about the calls made by the chief compliance officer or the IML reporting officer, well, you have a big problem, because the board is the ultimate decision maker, and the board is the only one that can ensure that the strategy is aligned with the risk appetite of the institution, that there is not a mismatch between the ability to take risks and the effective take-up of risk. And in this area, one consideration before we are talking about the risking, well, we have to be cognizant that in some member states in the Union, recently legislation was passed to oblige banks to take up clients unless they prove that there is a strong suspicion or hard evidence of money laundering and terrorism financing. I am not questioning the opportunity of passing or not the legislation. I am saying that banks must scale up the quality of their transaction monitoring system, irrespective of whether they want or not to have a new business proposition, because it is the society and the clients changing. And this obliges you to change your transaction monitoring, because new scenarios have to be prepared, not because you have a new business, it's because the context you operate in is not the one you had 6 years ago. And one of the most frequent findings that are raised by supervisors is the inadequateness of the transaction monitoring system. But I wouldn't say that the problem is the setting. I would say that the inaccurate or inexistent information collected at the onboarding is frequently the problem. Because if you go through some consent order in the US, because there is a lot of transparency on supervisory measures in the US, let me praise the US authority for this, you see what? That this or that bank, this or that crypto asset service provider didn't care to conduct a proper customer due diligence. Well, if you start wrong from the beginning, what could you expect? But let me talk about the business we do directly. Well, we established a few years ago an internal crypto asset task force because we have quite many people working on the crypto topic from different angles. As Yulia mentioned, I am in the policy division for banking supervision. So my day job is to contribute to the drafting of international standards, FSB level, BCBS level, because one thing that cannot be more true is that for crypto asset, more than in other places in financial regulation, we are as strong as the weakest link of the supervisory chain. So the most important aspect is to have a consistent regulatory framework that is enforced across the globe, because the most important threat we see as regulator and supervisor is the possibility to benefit from regulatory shopping, the so-called offshore activities. You establish a CASP in a non-compliant jurisdiction, and this CASP, through a front CASP in a compliant country, provides services to the clientele without complying with the prudential and the AML legislation. And in July, ESMA published a very interesting opinion on the red flags of practices that point out a possible abuse of offshore activities. The policy work is important, but the policy work is not the only plank of our effort. However, in the policy, we have seriously worked on the indirect exposure. In the BCBS, Basel Committee Standard 545 on the prudential treatment of crypto assets, a lot of emphasis has been placed on the fact that banks have to consider 360 degrees their exposure to crypto from all the possible avenues. And one of the possible avenues is the role that banks play in the payment system, and the functioning of the proper functioning of the payment system, as I mentioned before, is one of the key tasks of the ECB. And this is an area where we have to maintain a close eye to the possibility of circumventing the sanctions against main rogue actors, either private or state-sponsored. And because we have a financial stability mandate that probably is the one that is mostly remembered by many people, well, we have to look at the overall take-up in the economy of crypto. For the time being, we are quite comfortable that the situation does not pose a major threat, but we need to be vigilant. And as was mentioned a while ago, it is not enough to look at on-chain transactions, because most of the transactions are off-chain and we do not have visibility. And establishing obligation to report to competent authorities is something very important to enable us and other financial stability supervisors to have a true picture of the situation. I have to say that here a big problem is the lack of an harmonized taxonomy across the private sector.
Thank you very much, Nico. And we have a number of questions from the audience, which is great. So the first one is to Joana. How would law enforcement get travel rule data?
Actually, I have a question. Is that law enforcement or legal entities? So, but focusing on law enforcement. Because if it's the law enforcement, they have access to data directly from the legal entities. So from the entities that actually deal with the transfer of funds. Not from authorities. So at the European level, we can take authorities into two different practices. We have authorities as law enforcement or authorities as AML, CFT, competent authorities. And here is about supervision. And these authorities, they wouldn't in principle have access to the travel rule data, but law enforcement, yes, whenever there is suspicions of money laundering financing, and in that case, they have to report the obliged entities. They have to report to law enforcement.
I think there has been a change, so yeah, that's okay. We can jump to our banking representatives. So there is a question, what should be additionally implemented to effectively prevent money laundering using crypto assets, comparing with the traditional KYC rules that most FIs have adopted?
Yeah, so of course, so I understand that the question is not about blockchain, but focus about traditional means and what can we have. So of course we have some parts of policies, operational procedures that need to be adopted to take into consideration this risk. Pamela was speaking about correspondent banking. So for example, now we see that some big banks, there is a CASPs or they accept a lot of customers that are CASPs. So how me as the representative of the banker, I would need to assess how they deal with such customers and with these risks. So I would need to adapt. We use CBDDQ, Wolfsberg questionnaire, right, to assess the strengths of the financial framework of such correspondent banking partners. But here we need to adapt and to add specific question to be able to assess this risk. So the same for other types of customers, right, related to this sector. So we need to understand the activity and adapt the questions to better target the risk and then decide, right? Even if we don't use blockchain analytics, right? And then about the transaction monitoring tools, of course, we need to measure the exposure to understand the zones of risk areas, you know, how much we're exposed, and to understand their volume, the scope of those transactions related to crypto. This can be done with the implementation of specific lists of the entities engaged. So it's not only crypto exchanges, these are PSPs that are more, some of them traditional PSPs that are also accepting the crypto, offering this. So we need to understand, but it's a challenge to have to update such kind of lists. There is no unified list, so it's really a challenge to cover. We won't necessarily have the view of all the exposure, but it's still the good starting point, right? And then you would need to adapt. You won't be able to handle all transactions one by one. So it's risk-based approach as usual. You would probably target the situation which are more risky, for example, the WASP that are not regulated in the European Union, that are not regulated at all. You would need to adopt, do you accept such transaction of your customers with such kind of WASP? So there are means to handle, even if you don't have specific tools, blockchain software, right? There are a lot of things to consider in this framework, if you want to.
Sure. And here, just to complete, the EBA actually did a lot of work. So if you're working in the European market, the EBA did a lot of work to clarify this. And I'm talking about specifically the risk factor guidelines, which were published this year as well, the travel rule guidelines. And then at the end of the year, hopefully, we are going to have the sanction guidelines, which are going to really explain you as well a bit more the difference between what are the sort of controls that you should put in place for traditional products and services and for crypto.
Thank you. And we have a couple of minutes left. So if you had one idea on what can be done by regulators and banks to combat crypto-related financial crime, taking into account innovation and having to preserve it and not block it, what would that idea be, Pamela?
So yeah, and this kind of goes to one of the question about KYC too. We all know that there's still exchanges out there that do not do KYC on their customers. They are generally in jurisdictions that don't require it. And we all know that those are the best mixers in the world, right? So highlighting those transactions is key to identifying suspicious activity. If one of the exchanges that we bank or one of the exchanges that we bank through a correspondent bank receives funds directly from one of the exchanges without KYC that is known to be a higher risk exchange, and those funds are continuously popping through that high risk exchange into our clients or into our client exchange or into our correspondent bank's exchange, there's a reason for that. They're laundering their money through the exchange with no KYC and then popping it into a legitimate exchange so that then they can off-ramp it through a legitimate bank. So that is going to have a SAR. I'm going to file a SAR on it every single time. So keeping an eye out for that activity, I would say, is key. watching the KYC at those exchanges that continue to kind of buck the KYC or the regulatory requirements to do that and continue to operate in the gray space out there, I think is important for us to be able to get a handle on it.
Nico, do you have anything to add on that one idea?
Yes, I have to prove once again that I am an old school person. Sorry for being as such, but let me say the following. If banks are among the gatekeepers, there is a reason. If you have to be a gatekeeper, you have to be cognizant of what your responsibilities are. So in my view, and on this, I will say that I am borrowing words of the Vice President of the Supervisory Board of the ECB, governance and ethics are of utmost importance. When there is weak ethic or no ethic in an institution, whichever the institution is going to fail. So here the true question is, when people are hired, especially for senior positions, it is verified whether or not, irrespective of what the legal obligation in the country are, if these people are fit for the job, if they have a strong moral compass. Because if the right tone is not set from the top, we will not expect that frontline, although trained, do the right things. Because if people in the front line do not know that they are expected to stick to high ethical standard, they say, well, I want to earn variable remuneration. So let's sell as much as possible, whatever it takes. They should receive a different message from the top. But to get a different message from the top must have a different mindset. In the union, we have quite strict requirements, but it is not always possible to look into the mind of people and the way they are going to act in the future. In the Netherlands, they have been using for quite a long period of time something that I consider a quite effective mechanism, a psychological assessment of the people in charge of senior role at organization, because this assessment may be sometimes work, sometimes doesn't. It will give you a different perspective about the person, and you may better assess, I do believe, whether this person is fit for the job, because there is no rule we can think about, no rule we can enforce, if there is no cooperation, no genuine cooperation from the side of the people that they have to apply that rule.
Very quickly, Olga, one idea.
Very quickly, one idea is the external engagement and public-private partnership. I would like to highlight and illustrate by the EFIPPP crypto workstream. I think the great engagement from people that we have more than 100 people in the workstream, and we are meeting every 6 weeks on calls and in plenaries in The Hague hosted by Europol. And this is the great means for financial institutions to learn about crypto, to enhance the knowledge, to build network, to create connections with the people also from crypto ecosystem, because it helps to raise awareness, to understand how it works, and to build this great network of experts and to share and to find solutions, to understand the regulatory requirements. So I think that that's also one of the key things that the traditional financial institution need to think about. Thanks.
Thank you, Joana.
That is
Last
a very
word
good
is yours.
Thank you. That is a very good point, the PPPs, and we are particularly very fond of this, and that's why we did that for the travel rule guidelines. But my point and best advice that I can give you is really bother your national supervisors. Make sure that you are annoying and you ask all the questions that you want, because what we see is that there is a lot of misinterpretation of what is in level 1 text, in regulation and in guidelines and in regulatory technical standards, and you just apply what you think should be applicable. But you should really ensure that what your interpretation is what is the supervisor expectation as well. So really ensure that you contact your national supervisors to be sure that you are both on the same page, so you avoid a fine in the future.
Thank you so much, everyone.